Hey folks, welcome to Pro Trader Strategies. My name's Eric Wilkinson and this is Spotting the Trade. I'm going to get you what you need to know before you go, and that starts off with the economic data, how that impacts the overall markets with some market analysis, and we'll sprinkle in some geopolitical fodder in order to really round off the whole market analysis thing. So let's get started with some economic data. Remember, yesterday we saw a lot of economic data. It was core durable goods, Purchasing Managers Index across the pond. Those were all looking pretty good here, except for here in the United States. Those durable goods and orders, a little bit of an iffy number there, but across the board, pretty good economic data. Retail sales did miss this morning in Great Britain, but we've been seeing some pretty weak numbers coming out of Great Britain anyway. We also saw German business climate really pull back. Now, a lot of that's going to have to do with Russia and their ties there. They're going to see some weakness on their business climate. That's for sure. Something to note about the broader European region, the manufacturing sector is really generated by Germany and France. So we start seeing a pullback in Germany. That's going to be some of the manufacturing sector. That's going to slow down some of that production of products coming out of the European region there. And we've got a plethora of Fed governors speaking again today. So if you haven't had enough, well, you're going to get your fill for today on the week, really, because it seems like a lot of people are even talking again this week. Second time talking, I guess. All right, so nothing's really let up over in Europe. It looks like Ukraine is kind of holding up pretty well, but we still have those tensions with China and what they are going to do. You know, they are the loose cannon right now. So going into the weekend, again, folks, going into the weekend, I think you could probably see some weakness. Now, I know I keep beating this dead horse that the risk is to the downside, and we are upticking, but you guys know and can feel that it is feeling a little bit toppy here, at least in the broader equities for the most part. We're back to those points of controls, but we've made some moves off the bottom. Look at like a 10% correction. We've rallied back about halfway almost. Now it's starting to look like we could see some a little bit more weakness sneaking into this market here. Crude oil coming off a little bit. Now we've been seeing some demand from this coming from the manufacturing sector. We've seen crude oil numbers come off. We also know supply is going to be limited from Russia. And even I think it was Chicago, or at least Illinois, put a ban on all fossil fuel investment, I think it was. Folks, that's just not really a great idea right now. I mean, folks believe that these batteries are better for the environment, but when you look at all of the mining operations that go into what it's needed to create just the battery, 1,000 pounds of a battery, 200 pounds is copper, and a few hundred pounds is nickel, and then we've got cobalt from the Congo, where that whole thing. So it's not really a carbon negative thing as far as I can see. So with this ban here on fossil fuels, I'm not huge on fossil fuels. I'd love to have an alternative, but at this point in time, it's just not there as far as I'm concerned. So crude oil coming off a little bit, despite the fact that we're seeing some of that demand there. I think it's going to stay elevated in these 90s, at least for the foreseeable future there. Now, bonds have come off. I don't know that they have a whole lot of room. I would sell into these rips in the bonds, doing covered calls around a portfolio that we don't normally trade. I talk about how to do that in some of our videos, so please check that out, Pro Trader Strategies. I do videos every week. And these I come in unannounced. So when you're subscribing, make sure you get that little bell, because that tells folks that I'm coming in unannounced. And smash the like button for me before you go. And then we go over to gold futures, continuing to climb here. Trying to stay into 2000 is a tough road to hoe at this point in time. But market is going to be driven by inflation, and we're starting to see some of these inflationary numbers not be so transitory. And I've talked about this in the past. Once we start seeing manufacturers pass higher prices on to the consumer, they're going to continue to do that until we say stop. And at this point in time, we've seen this inflation. Folks haven't said stop. It seems like there's a breaking point kind of starting to happen here, where folks are pulling back on some of the purchases, and it's going to slow down, hopefully, some of this inflationary pressures to the upside. But they shouldn't stop, really, to be honest, until we all say we're done buying at these levels. Bitcoin starting to break out a little bit here, getting out of that value area that we were talking about, where there's been a lot of time, volume spent. Folks aren't going to be too anxious to jump on. But now some of those late players, as we start breaking out to the upside, could start looking to jump in on the back end of this move here. And I wouldn't necessarily say it's a back end, but it does have a 200-day that lines up with the point of control. Now, a lot of folks out there are going to be talking about the 200-day and how that's going to act as resistance. But folks, when it lines up with the point of control, and other people out there that have been really active in this market recognize these numbers and just don't trade them. So we could easily see it flutter back and forth and not really act as a support and resistance like we could see at other places when the markets are moving. Now, VIX has continued to slide. We haven't seen the teens in quite some time, which is really where the VIX is normally. So we have had elevated volatility, and I've talked about how to take advantage of that volatility. This is the time that we need to be looking at volatility as our friend and taking advantage of it. Now, with these corrections, these are the times I like to sell puts. Why? Because when you're selling a put, you can collect a credit, and it gives you the opportunity to buy something that you want to put in your portfolio. Now, I'm not just saying willy-nilly throw out puts all across the board. It's in things that you want to add to your portfolio. And I talk about what should be going through your mind frame or mindset when you're setting up these types of strategies in those videos. So please check those out on YouTube there. But Nasdaq here, although it has climbed back to the point of control, one of the things that we're looking at here is this topping pattern. Yes, we did have one a few days ago, and I talked about how that was going to be something we were looking at. It never got confirmed. The next day, we got a little bit of a pullback. It started looking like we were going to have a correction again. Now, this is the third one. I don't know if this is the actual topping one. We haven't gotten a confirmation, but going into a weakness or going into a weekend, we have a tendency to see this weakness creep into the market. Not this past couple of weeks, though. It seems like Fridays, despite the fact that we have all this turmoil going on, there's been folks looking for value coming into a Friday. So risk is on going into the weekend when folks are doing things like that. Usually when we see that weakness on a Friday with this kind of turmoil, it's leaning towards to the downside. Strength into the Friday with all this turmoil gets me a little bit, on my heels or on my haunches a little bit, waiting for confirmations. I'm usually more aggressive of jumping in on something where I see the topping pattern at this point in time when all the levers and pulleys aren't necessarily working correctly in my mind anyway. I'm going to look to wait for more of a solid confirmation. This is a topping pattern. I'd wait for a red candle right next to it. All right, Dow Jones Industrial Average, again, very similar structure here, what we're talking about, a bit of a topping pattern, broke out to the upside, broke that pattern. Again, got then a dark cloud. We talked about this throughout this week. Looks like it's pretty bearish. Now we erased it yesterday, but again, topping. So the bulls and the bears are really battling it out here at the point of control, but it's on low volume here. So it makes it look like it's risk to the upside, but I would say it's still to the downside because it's so fragile right now that anything that changes the bulls' minds or gets them to pause, this market's going to start to look to correct. So I'm still saying risk is to the downside, despite the fact that we've broken out to the upside. We've broken the lower lows, lower highs. Yes, that is indicative of a recovery, but I don't think we're out of the woods yet. We should see a pullback and then have a lower, a higher low is what I would like to see on a correction. A higher low would then start giving that indication that we are moving to the upside. So mini S&Ps, nothing really to see here at this point in time. But again, still looking in my portfolio to get out of these covered call strategies that I've looked at. You guys know ConocoPhillips. I'm short at the 120 area, long at 80. Long the stock by selling puts, then start to look at covered calls here, lower cost basis. I'm short at 120. I'd be happy to have a trade where I bought it at 80, sold it at 120. That's a nice trade, folks. I'll take that all day long. And in the meantime, if I can lower my overall cost basis, get a free dividend, if you will, then I'll be happy to do that. All right. I hope everybody has a great weekend. watch for risk to the downside heading into the close. We could start seeing some people start to cover some of the positions that they've done well on this week, where they're just a little bit of the weaker hands, shorter duration trades. They've made a nice move. They've got to be thinking, I need to cover some of this risk before the end of the week. And we could see some weakness heading into that close. All right, that's all I got for you guys. Stay safe. And if you can't take that, take it easy. Hey, smash that like button for me.